Hi everyone, in continuation to my last video where we spoke about the taxation system of India and we started with GST. So let's continue with it further. India has adopted dual GST concept wherein the center and the state simultaneously levy GST on taxable supply of goods or services or both within the state or union territory. So, GST comprises of CGST levied and collected by central government, SGST levied and collected by state government, UTGST levied and collected by union territory. Now let's talk about the registration under GST. Every supplier of goods or services need to obtain registration in the state or union territory from where they are making taxable supply of goods or services, if their turnover exceeds the threshold limit. Now, what is this threshold limit? Manipur, Mizoram, Nagaland, Tripura. Those making taxable supplies of goods or services from these states need to obtain registration if their turnover exceeds the threshold limit of rupees 10 lakh. Manipur, Mizoram, Nagaland, Tripura. Repeat it with me. Manipur, Mizoram, Nagaland, Tripura, 10 lakh. Remember like this: Manipur, Mizoram, Nagaland, Tripura, 10 lakh. Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana. Suppliers making taxable supply of goods or services from these states need to obtain registration if their turnover exceeds 20 lakh. First was 10 lakh, for these states is 20 lakh. Now, Assam, Himachal Pradesh, Jammu and Kashmir and other states, the suppliers need to obtain registration if their turnover exceeds the threshold limit of rupees 20 lakh, making taxable supply of goods or services or both. But if they make taxable supply of only goods, then the threshold limit is 40 lakh. Now, the order of utilization of input tax credit. First, the input tax credit of IGST has to be utilized against IGST, and then for CGST or UTGST or SGST. After all the IGST credit is utilized, only then CGST will be used. And the input tax credit of CGST will first be utilized for payment of CGST, then for IGST, not for SGST or UTGST. And the input tax credit of SGST will be utilized for payment of SGST first and then IGST. That is CGST and SGST. CGST, the input tax credit of CGST can't be used for payment or can't be used for payment of SGST, and the credit of SGST cannot be used for payment of CGST. Let's take one example. Now let's take this example: intrastate supply of goods or services by A to B. Value charged for supply of goods or services by A 1000. As because it's intrastate supply, so CGST and SGST is charged 80, and this 90 and 90 will be paid remitted by A to the government. Further, this supply of goods or services by B to C. Now B supplies these goods to C with a value addition of 20%. So he charged 1200, and just because it's intrastate supply, CGST and SGST comes to 108 and 108. But now he will be able to take the input tax credit for the purchase made from A, 90 and 90. So now let's understand further. Computation of CGST or SGST payable by B to government. So CGST payable 108 and credit of CGST, the purchase he made was inclusive of GST, so this is the GST part. And then net tax payable to the central government is 18 and net tax payable to state government is 18. So he was able to take credit, and here first CGST is first utilized for payment of CGST and SGST is first utilized for payment of SGST, and then it will be utilized for payment of IGST if there is any balance payable for IGST. I'll come up with further examples in my next video. Thank you.